And we are, as we've been discussing, in the middle of tech earnings season, and so far 3 out of the 5 FAANG stocks have reported. Here to break it down for us, Santosh, head of research at Manhattan Venture Partners. Good to have you on the show again.
Nice to be here.
All right, let's begin with Facebook, right? Because for all the talk of its demise, Facebook says profit up 63%. It actually added users to 2.2 billion. And you know what? Advertisers really didn't go anywhere. I mean, is this the Teflon company?
No, I think Facebook was never about the first quarter. It's all going to be about second and third quarter, if not longer. There's a big overhang out there on the stock. The privacy issue is hanging in there. Europe has new rules starting May 12th, I think. So I think that's the overhang. So the stock is really range bound for a while. We have to see, in terms of operations, Facebook is hitting on all cylinders, like they say. All the metrics are solid. So there's no question about that. So it's just the macro variable that's really holding the stock back.
So you think that it will be touched ultimately by this data scandal?
We don't know yet. We don't know. I mean, I don't know if the regulators are going to do it. Normally when they do it, they go overboard. So we really don't know where it's going to fall. But I think Facebook is doing a good job saying that we can do it. We can self-regulate. We'll do everything that's needed. So I think that assurance should help. Mm-hmm. But I'm sure there will be some semblance of regulation here and there on the edges to keep them on.
But it seems like users are sticking around and advertisers, at least for now.
Absolutely. I think as long as the users are there, advertisers are not going anywhere. At the end of the day, this is the only game in town, Google and Facebook. If you want digital advertising, they control a major chunk of the advertising budgets. So I don't think that's happening. And that's the best way to reach people. With 2.2 billion people that Facebook has, mm-hmm. and about 1.9 billion active users, daily active users, I think that's a big number that advertisers cannot miss out.
They can't ignore it. You mentioned Google. Google's parent Alphabet, also Netflix, had strong earnings recently, but Apple out with earnings on May 1st. That could be a tough quarter for investors. What are we going to be focusing on?
Well, Apple already has sold off quite a bit. There's been some talk about how the panels are down. I think Samsung reported that their sales are down. So I think that's going to impact. iPhone 10 sales have not been very good. So overall, I think that in terms of that, the sales of iPhone, that's kind of soft. But on a larger scale, the macro, the tailwind, or rather the headwind, is the trade wars. China is a big market. India is going to be a big market. So anytime there is any kind of trade war going on, that'll affect Apple. So we don't want that to happen. So that's the last thing it needs right now in the face of iPhone sales slowing down. But other things are working fine. The services business is good. Overall, Apple is good overall, but on a relative basis.
The HomePod speaker, though, may have missed it there.
Yeah, they're behind Alexa, but I think it's still good. Still there. But Google has many levers to pull. You know, their search engine, I mean, their search budgets, they control about 90% of the search advertising budgets. So I think they have many things to go by. The YouTube is solid, and they're getting into autonomous cars. So there's so many places they can go down the road. Mm-hmm. So I don't think they are at risk. The business model is not at risk. Yes, on a relative basis, maybe they might slow down. They're going to expend a lot of money. Their expenses are going to go up. So there's some issues that way. But overall, I think the business is still solid.
Now, the smart speaker and audio company Sonos announced that they filed the paperwork for an IPO. It could hit as early as this summer, looking at a valuation of $3 billion. This has been a big year thus far for IPOs, especially for unicorns successfully coming to market. Just wanted your thoughts on Sonos.
Absolutely. And that's what we deal with in my company, right, Manhattan Venture Partners. I think this is great news. I think the floodgates have opened for especially B2C companies, with Spotify coming out, Dropbox coming out with very good IPOs or listings or whatever you may call it.
Right, not traditional IPOs for Spotify.
Whatever,
right.
But they come to public markets with strength. So I think that's great news. DocuSign is coming up and a few others. Yep. So I think overall the sentiment, the appetite for companies such as this has opened up. And that's good. That's the way it's supposed to work. You know, IPOs, companies are private for 6-7 years, come out in the public market, and that's what it should be. They were holding back because there was so much money in the private market, they didn't need to. But at this point, I think the sentiment is there. All the stocks are performing very well, the new companies. So Sonos has close to $1 billion in revenues. That's what they said. So $3 to 4 billion is not unreasonable. That's 3 times sales. Spotify was priced at 4 times sales initially. It's trading much higher. Mm-hmm. So I think in terms of just the music business itself, and these guys do the speakers, and they're also getting into smart speakers, all that is well received. I think that's the way music is consumed now. Everybody wants digital services. I think Sonos plays into that market, so all that is good.